Hello everyone, I hope you're all having a great day today. So in today's video I wanted to show you a comparison between SHG and SHD. Hey guys, I just wanted to edit this in after the fact. I don't know why, but I somehow misspoke in SCHG versus SCHD. I kept saying SHG versus SHD. So just excuse that and realize that when I'm talking about SHG, I mean SCHG, and when I say SHD, I mean SCHD. So sorry about that, and I hope you still enjoy the video. And I wanted to go over the pros and cons, the potential upside, the potential capital gains, as well as dividend from SCHD that you would get. So let's get into the video. So this is SHG versus SHD comparison over time. And as you can see, they've both gone up a lot. SHD is up 216% and SHG is up 377%. This is a 10-year chart, so that's over 10 years. Now, SHD has outperformed SHG only a few times, one of those times being December 2022 and January 2023. So that's when we saw pretty much the entire market going down, but mostly growth stocks that had just exploded, they were going down. And now it's become another bull market. So SHD and SHD have both gone up a lot, but as we can see here, SHG has been killing SHD in terms of stock appreciation, or ETF appreciation, I should say. So SHG is Schwab's US Large Cap Growth ETF. The fund's goal is to track as closely as possible before fees and expenses the total return of the Dow Jones US Large Cap Growth Total Stock Market Index. Now let's go over SHG's holdings. So SHG holds growth stocks such as Apple, Nvidia, Microsoft, Amazon, Meta, Alphabet, Broadcom, Alphabet, again, Eli Lilly, and Tesla Inc. So as we can see here, they have a majority of their assets in Apple, Nvidia, Microsoft, and Amazon, and Google. And so that's SHG's holdings. Now SHD is the fund's goal of SHD is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. So this is their dividend yielding stock, and their portfolio is comprised of Home Depot, Cisco Systems, BlackRock, Bristol Myers Squibb, Chevron, Lockheed Martin, Verizon, Pfizer, United Parcel Service Inc., PepsiCo Inc. And yeah, so these are all value stocks. So their intrinsic value is higher to most investors than the growth stocks, which are being viewed as stocks that are going to continue to grow and pay you out in terms of capital gains and stock appreciation instead of dividends. So SHD, over the past 5 years, SHD has gone up 57.86% for their stock or their ETF appreciation, price appreciation. So 57.86 divided by 5 is 11.572. Now, if we go to a SHD dividend snowball calculator or drip calculator, we can put our initial investment at $0, the current share price, the quarterly dividend, the annual dividend increase, and the share price increase that we calculated here, 57 divided by 5, 11.57. So if you invest $500 monthly for 30 years into SHD, you can expect to see $2,654,000 in your portfolio. Now, the dividends over those 30 years are $543,000. And if we take a look at the annual dividend, so this annual dividend, this column right here, we see that after 30 years, you're receiving an annual dividend of $71,000. Now, I think most people would be able to live off of that, so that's great. Now let's take a look at SHG. Over the past 5 years, SHG has gone up 150%. So 150 divided by 5 is 30%. Now, let's say you start with $0, invest $500 a month for 30 years, and your interest rate is 30%. So let's say that SHG maintains this growth rate for 30 years. And when we calculate the compounding interest annually, you'll end up with $52 million. Now, does that sound too good to be true? Yeah, I think so. So it probably is too good to be true. So that's the risk with the growth stocks. The potential upside is just absolutely insane, but you're risking because these companies could crash and burn. So you're risking when you go for the growth ETF, you're risking a lot more than when you go to the value or the dividend ETF. So growth stocks are stocks of companies expected to outperform the market over time, while value stocks are stocks of companies that are trading below their intrinsic value. The best choice between growth and value stocks depends on your financial goals and risk tolerance. So I can't stress that enough. You need to figure out your financial goals, your investment strategies, and your risk tolerance. So I would suggest taking a risk tolerance test online and figure out where you lie in that. Now, I believe that SHG and SHD could be combined to create a powerful portfolio, and I believe that combined these stocks can make for a great portfolio. So would I suggest one or the other over one or the other? No, not at this time, because there's just not enough historical data to make a decision on if one's better than the other. But I would say figure out your risk aversion, figure out how you handle risk, how you handle your financial goals, and figure that out and make a decision. Maybe you want to do 60-40, maybe you want to do 60 into SCHG because you like the growth stocks and you like the risk, and 40 into SCHD because you want those dividends payouts over time, that steady income. Or maybe you want to do the opposite, 60 into SCHD because you are less risky of a person and you'd rather see those dividends and the value stocks, you like that better. And 40% into SCHG because you are a bit more risk averse and you still want to have that exposure to the growth stocks. So yeah, thank you guys very much for watching. Please leave a like, a comment, and subscribe. Let me know what you thought about the video. A like really helps me out. It keeps me motivated and supports the channel, and subscribing is like a super like because that just keeps me very motivated and happy. So thank you very much for watching. Please like and subscribe, and I'll see you all in the next one.